Hello, everyone, and welcome back to TSAM Digital. I'm Anam Khan, the head of content at Fox On Media, and joined by me today, I have Marc Salter. Marc is the Director, Regulatory Technology at ACA Compliance Group. Hello, Marc, how are you?
Hi, man. I'm very well, thank you. Thank you for having me here today. Another wintry day in London, but it's great that I've got the chance to speak to the wider audience today.
Brilliant. Thank you for joining us, and thank you for your time, Marc. Really appreciate it. Today, we're going to be discussing compliance programs, adaptability, and evolution. To kick things off, Marc, it would be brilliant if you could give us a brief introduction about yourself and let our audience know about ACA compliance.
Yeah, great. So obviously I'm Marc Salter. I'm a director here at ACA, and my role and responsibilities really focus on our RegTech, so our technology platform, which is called Compliance Alpha here at ACA. I've been at ACA 6 months. Prior to that, I worked at a number of other regulatory vendors. My background has been trade surveillance for probably the last 5 or 6 years. But before that, I actually spent 15 years at various broker dealers. So I've come from the sell side directly into the compliance space today. ACA as a firm, we're a global compliance-focused consultancy business. We've got about 700 employees globally, and really we've been around for 20 years, and we have grown over time. We've been here in London for 10 years now, and I would argue when we look at maybe our core client base, it's really hedge funds and maybe the private equity space who make up our core clients. Obviously, we do have some larger asset managers, but we're probably renowned and known for being a compliance consultant in the hedge fund and PE space.
Thank you very much, Marc, for the introduction. My first question to you is, have you seen any change in approach from regulators generally since the start of the pandemic?
That's a great question. And I suppose one that we are fortunate to be able to provide some insight to. Obviously, we have a vast client base, and they are very good at sharing with us a lot of the insight and indeed direct questions that they receive from the regulators. At a high level, the regulators are very much, it's business as usual. We haven't really seen too much of a fundamental change in how they're going about regulating the markets. What we have seen, especially from the FCA here in Europe and the UK, is almost them becoming more prescriptive and being clearer in what they want firms to be focusing on this time. The FCA have gone as far as to set up a dedicated COVID response page that outlines a number of points that they think firms should be focusing on. They've gone as far as to recently publish insight into how they go about looking for potential market manipulation in the market, a potentially anomalous trade ratio, the PATR ratio, and they spelt out in great detail the various steps of how they would go towards a firm, what information they would look for, what market information they're looking for in specifics, and how they piece that information back together to look for potential cases of maybe insider trading or collusion amongst various firms. When we talk to our American client base, they're seeing the same level of inquiry and correspondence from both FINRA and the SEC. So again, I think all global regulators have been great at maybe articulating that firms really should be aware of the change in working practices and what that means in terms of possible cases of insider trading, with material non-public information. The level of personal account trading that firms or employees of firms are now undertaking, they've seen that actually increase quite a lot. And then finally, the method that employees have for communicating with each other. We've gone from being in offices where everything is done face-to-face to now everything is done via video call, Zoom, Teams, WhatsApp. And there's been a lot of stories in the press about the use of social media sites for communication for business purposes. So really what the regulator has seen is that firms really should immediately conduct almost and revisit their original risk assessments. The business model has changed, so go back and perform another risk assessment, look and for any gaps in your compliance program as a starting point, and then begin to build in various remediation steps so your compliance program itself is adapted to the changing condition.
Perfect. So the next question is, what do you feel is going to be shaping the future of risk and compliance?
So really what we've seen is, and what we at ACA have identified as 5 main characteristics that we think are going to have changed now going forward. And we've coined the term risk mutation internally, but we're really looking at one, compliance and risk professionals are now being tasked with doing more for less. So, people's balance sheets are now under strain. So we're looking at downsize pressure, maybe offshoring of certain tasks to various other locations where they can be performed on a cheaper basis. We're looking at potential automation of, I say, low value tasks. So obviously the increase in use of technology there to streamline the compliance process. Step 2, we're probably seeing the regulatory pressures. And this was happening before the pandemic, but really regulators have spent probably the last 10 years since the financial crisis investing in technology for themselves. The advent of what is supervisory technology, or SupTech is the new sub-brand. And they have the tools at their fingertips to really interrogate huge amounts of data, both structured and unstructured. And that is now requiring market participants to also be able to access their own data in a quicker and more efficient manner, just in terms of being able to then respond to regulatory inquiries in a timely manner. So we're also seeing the pace of change in general risk. So, I think COVID-19 has a number of effects. So we've now embracing the work from home. So, the disparate workforce, what that means both in terms of technology, I touched on earlier, communication methods. We're going to see, the advent of other maybe global crises, companies going out of business and what that means for supply chains, and how one as a firm can react to that ever-changing kind of, ecosystem. So that's going to cause firms to really have, be on the front foot, and how they keep their businesses safe and adapt to the changing environment. We've seen firms increase delegation of low value tasks externally. So, in the past, and I'll pick something like AML and KYC checks that traditionally have been done in-house. And for an example, when you're launching a new fund and you're performing AML checks on all your underlying investors, that has tended to be done on a kind of a one-time basis, so at inception of the fund or the investment, so to speak, and then done on an annual basis. We're now seeing firms really, and it's almost been driven by both the regulator and individual investors, to want to see that those kind of checks for protection of money happen on a regular basis. So to do that on a daily or a weekly basis, a lot of firms are turning to outsource firms like ourselves to take a lot of that kind of that the tasks that need a lot of time and effort onto our books, and actually only then correspond back with the client, when we have cases to really report and deem their attention. And then finally, and this has been really coming for the last 10, 15 years, the increased digitalization. We're seeing increased cyber threats. So there have been cases very recently where a certain hedge fund in Australia has been forced to close its business because of a cyber attack, where they managed to get inside to their systems and actually then start paying out money from their bank accounts to various offshore accounts. So the increased cyber threats, and I think COVID-19 has just sped that up. Actually, we've had a number of our clients contact us in the last week to say they have received this email from the FCA. Is it genuine? and actually it's been a phishing attempt. So I think the cyber criminals have used COVID-19 as a huge opportunity to really target the vulnerable.
Mm-hmm. Mm-hmm. And Marc, you mentioned in the points that you mentioned about the regulators becoming more digital. How do you think that will impact the industry and the way things operate?
Well, I think, you know, my gut reaction is to say, well, if a regulator can access and find the needle in your haystack of data in a very short period of time, and you as the owner of that data is found wanting and not being able to identify that, I think that doesn't bode well for future regulatory exams and deficiency notices that you will be on the receiving end of. You know, I have a great anecdote where this is probably 2 years old now, but I went to see a very large global asset manager, and they actually told us, and we were talking about trade surveillance at the time, they said to us that they had been asked to supply 6 months of trade history to the regulator. And the chief compliance officer went to his technology team and said, okay, we need to get all our trades and orders out of our order management system. This is the date where we need to submit it by. And that took 4 weeks to get the data out of their internal platform and provide it to the regulator. I think they managed to deliver it on a Thursday mid-afternoon. And the chief compliance officer said he came in on Monday morning and there was a huge list of responses from the regulator asking for further detail on, I think it was 3 trades out of something like 30,000, and they had found holes in some of that trading and wanted further information on. And it showed him that actually the regulators, the technology they have is far superior from what you and I or the firms had. And, you know, it was a call to action internally for them as a firm to say they can't be flying blind anymore. So I think as regulators visit a number of firms, and I think that will be picking up for the, you know, definitely the early part of next year, they will be looking at systems in place within these organizations and really wanting to, you know, we've moved on from do you have automated compliance systems to now going, okay, how are they set up? What do they capture? How easy is it for you to interrogate your data set? And then how quickly can you provide that data to us as a regulator? Transparency is the key going forward.
Mm-hmm, mm-hmm. And this leads us smoothly into my final questions. How can firms prepare for the future?
Well, here at ACA, we kind of think there are 3 different avenues for firms to begin to look at in terms of planning to go forward. One is obviously the use of technology, RegTech. There are a huge number of RegTech providers out there now offering, you know, some similar solutions, but really addressing multiple parts of what is an overall compliance program for a firm. So I think anyone who hasn't embraced technology will now be forced to go and looking in the marketplace. Well, actually, even before that, looking at a buy versus build scenario. But I think just from a cost perspective, they will end up, you know, going to the marketplace and really understanding, after completing their risk matrix, what tasks can benefit from automation and what tasks can actually be enhanced by the utilization of technology and things like that. You know, trade surveillance is an immediate point where you need to be interrogating vast data sets, and those data sets are getting more complex. Gone are the days where you could, you know, on a quarterly basis, look through all your data and, you know, do random sampling. That just isn't acceptable anymore. Another case that I touched on earlier in our conversation, employee trading. So the increase in employee personal account trading, how are they submitting those trades to you? Are they captured in a system? How are you then capturing whether or not your employee actually did the trade they asked for permission to do? I spoke to a prospect only last week, not in the UK, thankfully, but actually over in North America, who said they were receiving paper statements from their employees' brokers, and there'd been a problem with the post, and the postal service had lost 6 months of trade confirmations. That is a huge risk that firms just can't can't afford to have anymore. So it's being able to look at the various processes that you have internally and then going out to market and seeing where technology can pull that together. And then actually, once you've identified kind of areas where technology can help, actually looking to see whether or not there is maybe not going out and buying 5 solutions, because actually what you're then just replacing is 5 spreadsheets with 5 different solutions. Are there solutions that operate on more of an enterprise level that can pull in various parts of your compliance program and bring them together and actually give you that kind of holistic view, which is kind of the holy grail of what firms are looking for at the moment. So that's kind of strategy 1 as we see it. Strategy 2 would, going back to an earlier point, would be outsourcing. Mm-hmm. So going out to firms that have the expertise and the manpower to assist firms as your business needs change. So I touched on the AML example earlier, but if you're having to perform 500 checks on underlying investors for a new fund and you want that done on a regular basis, do you have the bandwidth or the technology in place to do that? Then what happens when you launch a second fund and you have to redo it and that number count comes up? Now, do you want to go and hire specifically for that increased that workload that could actually not be a sustained increase in workload? Or can you actually say, well, that's it's an important task that we need to capture within the firm, but are there people out there, third parties out there, that are better placed to be able to assist us with that, and then outsource that accordingly? And then finally, with COVID-19 and the ever-changing landscape, we're talking about ensuring operational resiliency. So, we've had to adopt, and everyone's adopted the way they work. We're all working from home a lot more than we even hoped we could do. Kind of the days where you wished for one day a week at home. And what that means, we're using new tools. Actually, from a technology perspective, it's caused and had an effect on the increase in cloud-based solutions. Only a few years ago, people were saying, well, investment banks or investment firms would never embrace cloud because they were worried about data security. We've now seen that actually without the cloud, we would be struggling with on-premise solutions now. So the adoption of cloud has changed the way we work. That said, I touched on cyber threats. Again, being able to mitigate and go through your policies and procedures and look for things like business continuity planning. How often do you look at that within your overall compliance program? What is your backup procedure for various systems? We touched on cyber again, and being able to actually protect your business. Data is the lifeblood of all firms now. How do you protect that data set? And then finally, and this goes back to the RegTech point in number 1, most RegTech providers are new companies. There are technology providers that have been around for a very long time, but new RegTech providers, some of them are less than 5 years old. So actually, if they're performing key parts of your business, what do you do to protect yourself from them and their operational resiliency? So actually, it's about understanding everybody in your supply chain and who you're reliant on to actually survive and operate efficiently as a business.
Thank you very much, Marc, for this really interesting discussion. Hopefully our audience have enjoyed it as well. And Marc is presenting again at TSAM Tech Show. Please don't forget to join us and hear more from ACA Compliance. Thank you.
Thank you very much.